I get even today's prices, they are having good value. Say for example, they recently acquired a company called Patni. Now they are league with one company called Infosys, Cognizant Technologies. They are in league to those companies now. So before the Patni acquisition, they are small. And also another advantage is I get CEO is Fanish Murthy. He came from Infosys. He built it up Infosys from just $2 million revenue company in US up to around more than $1 billion in 15 years. So he came to iGate, I think 6-7 years back. He's building that company. So when he came, the company market cap around like 200-300 million. Now it's more than 1.2 billion. They acquired Patni. That's a bigger firm than iGate. So if anyone buys today's prices, if they hold it for 3 to 5 years, they will at least double their money. That's very conservative calculation. So the stock may be around $50 to $60 in 2 to 3 years. That's what my estimate is. Because after they acquired Patni, they are in a league with all big IT companies. They should do fine in the coming years.
What kind of EPS estimate would underlie a $50 or $60 stock price for this company? I see the consensus for 2013, so more than a year out is about $1.66. Do you think that will get revised upward a lot after the Patni acquisition?
It will get revised up a lot because they are nowadays, previously say a couple of years back, their deals is ranging around like 300 million, 400 million kind of things. Nowadays they are getting a lot of new clients around more than $1 billion. The reason I was very much interested in this company is because of the management. Fanish Murthy brought in a lot of people from Infosys. So there is a lot of, I have a lot of confidence on that management. Still insiders owns around 40 to 50% of the company. So they have a best interest like a shareholders. So there are a lot of growth ahead for this company. They have a target of reaching 400 to 500 million net income in 2014 or 15. So if they reach a 500 million net income, just to put 10 times multiple, it's a $5 billion company. So now it's trading around like 1.2 billion. So think about it. So you can double money within 3 years.
And they've been, it sounds like a lot of the growth has come from acquisitions that they've done that have been very accretive. So is that kind of the model for the future as well? Once they digest Patni, then they can look for other deals and then take out costs and use synergies? Is that kind of the thesis?
Yeah, my thinking is, I think maybe for another 2-3 years, they will not do much acquisition because they took a lot of debt, around 700 million just for Patni acquisition. So their goal is to pay off that 700 million in 5 years, then do that. The one thing is now they are taking out a lot of costs from Patni, and also they are including a lot of, say example, fresh engineers. So how IT services company make money in this environment is they hire a lot of fresh people from India-based colleges. What they do that they train those people and put it in a project. So they may hire like a highly experienced guy in US, only freshers sitting in India, they will do all the coding. So this experienced guy will do that. So in Patni, normally experienced guys around 5 to 6 years in India, then more than 10 years in US. So what iGate is doing is now they are hiring a lot of freshers, then they are putting in India, putting 4 or 5 years guys in US. So their profit margin will increase. Their target is to reach 25% net income margin and 40% gross income. So now Putney it's around only 13-14%. So there are lot of room to increase net income.
And how do you sort of think about the moats around a business like this? There are similar companies, like you said, Cognizant and Infosys and others. So what can iGate do to protect its business over time?
If you are very strong in a particular client, they cannot able to switch over to the new client because it takes a lot of time and effort and money. So they are big in GE. Now they are going into a different like a financial companies and other new verticals like insurance companies and other stuff. And also they have another model like a pay for performance. Infosys and other companies, what they do is they take the whole project and then supply the bodies and then generate revenue from there. But iGate is doing differently, pay for performance. So that means, say, if it is any BPO project, depends upon the performance, they will get paid. So that differentiation gives iGate a lot of advantage recent days. I think they will win a lot of big deals after now they are winning a lot of big deals. So I think they will do fine in the years ahead.